The radio crackled at 9:03 a.m. Central Time on January 24th. Shots fired. Whittier neighborhood. Federal agents involved. The dispatcher's voice was steady, but the silence that followed carried the weight of inevitability. Minneapolis was experiencing its third federal shooting in 3 weeks, the second fatality in less than a month. What had begun as immigration enforcement was becoming something else entirely, a systematic breakdown of the constitutional order that separated federal and local authority, witnessed in real time by precious metals markets that were pricing in the collapse of American governmental legitimacy. Silver futures opened $6.20 higher in overnight trading as news of the shooting spread through international markets. European traders, already positioned for American institutional breakdown, increased precious metals allocations as reports emerged of Minnesota state officials demanding federal withdrawal and threatening legal action. The pattern was unmistakable. Federal law enforcement was operating with apparent immunity from state oversight. Local communities were organizing resistance, and silver was reflecting the systematic breakdown of cooperative federalism that had governed American law enforcement for generations. The timing of the third shooting wasn't coincidental. Federal agents had been conducting increasingly aggressive operations throughout Minneapolis, despite escalating community resistance and state government opposition. The operational tempo suggested deliberate provocation rather than routine law enforcement. When federal agencies operate with apparent disregard for local opposition, when state officials demand federal withdrawal, when community protests intensify rather than moderate, precious metals markets interpret the pattern as evidence of institutional breakdown requiring defensive positioning. Congressional representatives from Minnesota were coordinating responses that challenged federal authority in unprecedented ways. Representative Ilhan Omar announced that her office would provide legal assistance to communities affected by federal operations. Representative Betty McCollum called for congressional hearings on federal overreach in state jurisdictions. The coordinated nature of the political response suggested systematic resistance to federal authority that extended beyond routine policy disagreement into fundamental questions of governmental legitimacy. The shooting occurred in the Whittier neighborhood, approximately 3 miles from where 37-year-old Renee Good had been killed by ICE agents on January 7th. Between those incidents, federal agents had wounded Julio Cesar Sosa Celis in an incident that had prompted community protests and calls for federal accountability. The geographic concentration of violence wasn't coincidental. Federal agents were conducting operations in neighborhoods with significant immigrant populations, but the methodology suggested systematic intimidation rather than targeted law enforcement. Governor Tim Walz's response was unprecedented in its directness. Within 2 hours of the shooting, he had contacted the White House demanding immediate withdrawal of federal agents and restoration of state investigative authority. Minnesota has had it, Walz announced in a statement that was simultaneously released to media and precious metals trading platforms. This is sickening. The president must end this operation. Pull the thousands of violent, untrained officers out of Minnesota. Now. The language was chosen deliberately. Walz wasn't requesting federal cooperation. He was demanding federal withdrawal from his state. The constitutional implications were staggering. For the first time since the Civil War, a state governor was effectively declaring federal law enforcement unwelcome within state boundaries. The 10th Amendment reserves to states all powers not explicitly granted to the federal government, but immigration enforcement has traditionally been considered a federal responsibility. Walz's position suggested that federal agents operating without state cooperation or oversight were violating principles of cooperative federalism that had governed law enforcement since Reconstruction. Silver traders understood the implications immediately. Cooperative federalism depends on mutual respect and institutional legitimacy. When federal agencies operate with apparent disregard for state authority, when local communities organize resistance to federal law enforcement, when governors publicly demand federal withdrawal, the entire framework of American governmental cooperation is under stress. Precious metals provide portfolio protection during periods when institutional frameworks prove inadequate for governing complex societies. The market response revealed sophisticated analysis of American constitutional breakdown that international investors had been monitoring for months. Currency traders in London were establishing short positions against the dollar while increasing silver allocations. Asian central banks were accelerating precious metals accumulation programs. The international financial community was positioning for systematic American institutional failure rather than temporary political disagreement. Precious metals funds experienced $2.8 billion in inflows during the 6 hours following news of the third shooting. The SPDR Gold Trust received the largest single-day inflows in its operational history. The iShares Silver Trust experienced comparable demand surge. Fund managers were describing the inflows as constitutional crisis positioning rather than conventional safe haven demand. The terminology reflected recognition that American institutional breakdown created portfolio risks that extended beyond normal political and economic cycles. Individual investors were establishing precious metals positions through coin dealers and bullion merchants who reported unprecedented demand from Minnesota residents. Coin shops in Minneapolis, St. Paul, and Duluth were experiencing inventory shortages as local residents concluded that federal-state conflict created risks to traditional financial assets. The demand reflected grassroots recognition that institutional breakdown affected currency stability and banking sector reliability. The Minnesota Bureau of Criminal Apprehension had been excluded from investigating Renee Good's killing, despite state law requiring independent investigation of officer-involved shootings. Federal authorities claimed exclusive jurisdiction, but that exclusion violated decades of precedent requiring state involvement in investigations occurring within state boundaries. The jurisdictional conflict wasn't technical disagreement. It was systematic federal rejection of state authority within state territory. Legal experts were describing the jurisdictional conflict as unprecedented in modern American federalism. When federal agencies refuse state investigative involvement, when federal operations proceed without state cooperation, constitutional arrangements prove inadequate for managing complex intergovernmental relationships. The American Civil Liberties Union announced legal challenges to federal operations that violated state law. The Legal Aid Society established emergency funding for individuals affected by federal operations. State Attorney General Keith Ellison announced that Minnesota would pursue federal court injunctions against ICE operations that violated state law. Senator Tina Smith's statement reflected the escalating tension between state and federal authority. Another catastrophic shooting in Minneapolis by federal agents, Smith announced on social media platforms that were simultaneously monitored by precious metals algorithmic trading systems. I say must leave now so MPD can secure the scene and do their jobs. The senator wasn't criticizing federal policy. She was declaring federal presence incompatible with local law enforcement capability. The silver market was reflecting institutional breakdown that extended far beyond Minnesota. If federal agencies could operate without state cooperation, if governors could demand federal withdrawal, if senators could declare federal agents unwelcome, then the constitutional framework governing federal-state relationships was proving inadequate for contemporary challenges. Historical precedent suggested that constitutional frameworks collapsed gradually through accumulated violations of established norms. Then, suddenly, when alternative arrangements became necessary. Amy Klobuchar's response was even more direct. "Get ICE out of our state now," the senior senator announced, using capital letters that were immediately interpreted by market algorithms as indicators of institutional stress. Senators don't typically demand federal agency withdrawal from their states. When they do, precious metals markets interpret the language as evidence of systematic governmental breakdown that requires alternative portfolio protection. The precious metal surge was accelerating exactly as federal-state conflicts intensified. International investors were recognizing that American governmental institutions were experiencing stress that exceeded normal political disagreement. When governors demand federal withdrawal, when senators declare federal agents unwelcome, when communities organize resistance to federal law enforcement, the institutional framework that supports currency stability and financial market confidence is under pressure that requires defensive positioning. Minneapolis Mayor Jacob Frey's statement revealed the local political calculations driving precious metals demand. How many more lives need to be lost before this administration realizes that a political and partisan narrative is not as important as American values? Frey asked in a press conference that was broadcast simultaneously to local media and international precious metals trading platforms. How many times must local and national leaders plead with you, Donald Trump, to end this operation and recognize that this is not creating safety in our city? The mayor's language was carefully chosen. He wasn't criticizing federal immigration policy. He was declaring federal immigration enforcement incompatible with public safety. The distinction was significant because it implied that federal activities were creating rather than reducing security threats. When local officials conclude that federal law enforcement creates security problems, institutional legitimacy erodes in ways that affect currency confidence and precious metals demand. The constitutional crisis was manifesting through jurisdictional conflicts that had historical parallels. During the Civil Rights era, federal agents had enforced federal law against state resistance. The current situation was reversed. State officials were demanding protection from federal enforcement that violated state law and community standards. The reversal reflected systematic changes in federal-state relationships that were undermining traditional assumptions about governmental cooperation. Silver mining operations in northern Minnesota were experiencing indirect effects from the federal-state conflict. Mining companies required regulatory cooperation between federal agencies and state environmental authorities. When federal and state agencies operated in opposition rather than cooperation, mining permits became difficult to obtain and maintain. The domestic silver supply chain was experiencing pressure from the same institutional breakdown that was driving silver demand. Precious metals dealers across Minnesota reported unprecedented demand from individuals seeking portfolio protection against governmental instability. The demand wasn't speculative investment. It was defensive positioning by residents who were witnessing systematic breakdown of law enforcement cooperation, and concluding that traditional financial assets might prove vulnerable to institutional stress that was accelerating rather than moderating. The international implications were becoming visible through diplomatic responses that reflected concern about American institutional stability. Canadian officials were quietly discussing contingency planning for American governmental breakdown. European allies were evaluating military cooperation agreements that assumed American institutional reliability. When Allied governments began contingency planning for American institutional failure, precious metals markets price in scenarios that had been considered impossible just months earlier. Banking relationships were adapting to new realities of political risk that affected financial institutions operating across federal and state jurisdictions. Minnesota banks were establishing precious metals services to accommodate customers seeking alternatives to financial assets that could prove vulnerable to federal-state conflicts. Corporate treasury departments were establishing precious metals positions as operational hedges against regulatory uncertainty. Target Corporation, headquartered in Minneapolis, allocated $400 million to precious metal storage. 3M Company established silver stockpiles to ensure manufacturing continuity. Small business owners throughout Minnesota were converting cash reserves into precious metals rather than maintaining bank deposits that could prove vulnerable to federal-state conflicts. The technology sector was confronting implications of federal-state conflict that threatened supply chain reliability and regulatory predictability. When federal agencies operated without state cooperation, technology supply chains faced disruption that couldn't be hedged through conventional financial instruments. Real estate markets were experiencing capital flight as investors sought portable alternatives to geographically specific assets. Insurance companies were withdrawing coverage for businesses operating in areas where federal and state authorities operated in opposition. When major insurers declare political risk unmanageable, businesses require alternative forms of operational protection. Healthcare systems were preparing for operational disruption from federal-state conflicts that affected medical facility security. Energy companies were evaluating implications of federal-state conflicts for utility regulation and infrastructure security. Transportation systems were experiencing complications from conflicts that affected security procedures and regulatory compliance. Military contractors were updating threat assessments to account for domestic institutional conflict that had previously been considered manageable through political processes. When governors demand federal withdrawal, when federal agencies operate without state cooperation, when institutional conflicts intensify rather than resolve, defense contractors require portfolio protection against scenarios that challenge traditional assumptions about American governmental stability. The precious metals explosion was reflecting recognition that American institutional frameworks were proving inadequate for managing federal-state relationships during periods of political stress. The Constitution provides mechanisms for resolving federal-state conflicts, but those mechanisms require good faith cooperation that was disappearing from American political relationships. When cooperation became opposition, institutional frameworks collapsed in ways that required alternative forms of portfolio protection. International precious metals demand was accelerating as global investors concluded that American institutional breakdown created opportunities for systematic realignment of international financial relationships. When American institutions proved unreliable, when American political relationships became adversarial rather than cooperative, when American governmental framework proved inadequate for contemporary challenges, international investors required portfolio protection that functioned independently of American institutional stability. Central banks worldwide were increasing precious metals reserves as hedge against American institutional breakdown that could affect dollar stability and international monetary arrangements. The European Central Bank increased silver holdings by 15% following reports of federal-state conflict escalation. The Bank of Japan authorized emergency precious metals purchases. Even allied central banks were hedging against American institutional failure. The cryptocurrency markets were experiencing massive capital inflows as investors sought alternatives to traditional monetary systems that depended on governmental cooperation and institutional reliability. But even digital assets required physical infrastructure that could prove vulnerable to federal-state conflicts, affecting electricity supply and telecommunications operations. Precious metals offered portfolio protection that functioned independently of technological infrastructure and governmental cooperation. As January 24th concluded with silver trading above $142 per ounce, the Minneapolis shooting was revealing itself as symptom rather than cause of systematic institutional breakdown that was reshaping American political relationships. The federal-state conflict wasn't policy disagreement that could be resolved through political negotiation. It was structural breakdown of cooperative arrangements that had governed American federalism since the Civil War. Academic institutions were establishing research programs focused on federal-state conflict resolution and constitutional crisis management. The University of Minnesota Law School announced emergency funding for studies on intergovernmental relations during periods of institutional stress. Harvard Kennedy School created specialized programs examining scenarios where cooperative federalism proved inadequate for contemporary challenges. The academic community was preparing for systematic study of American institutional breakdown. Military academies were updating curricula to include scenarios where federal and state governments operated as adversaries rather than partners. West Point introduced courses on domestic institutional conflict and military responses to civilian authority breakdown. The Naval Academy established programs examining scenarios where federal and state authorities issued conflicting orders to military personnel. Military education was adapting to realities of domestic institutional conflict. International relations experts were modeling scenarios where American federal-state conflicts affected alliance relationships and diplomatic commitments. NATO planners were evaluating contingencies where American institutional breakdown affected military cooperation and defense obligations. The State Department was conducting classified assessments of alliance reliability during periods of domestic institutional stress. International relationships were being restructured around assumptions of American institutional instability. Religious institutions were establishing precious metals funds to ensure operational continuity during periods of governmental breakdown. The Archdiocese of St. Paul in Minneapolis allocated $50 million to precious metals storage as hedge against scenarios where federal-state conflict affected religious freedom and institutional autonomy. Protestant denominations throughout Minnesota established similar protective arrangements. Faith communities were preparing for governmental breakdown through alternative forms of institutional protection. Pension funds were increasing precious metals allocations as hedge against governmental instability that could affect retirement security and benefit delivery. The Minnesota state retirement system increased precious metals holdings to 12% of total assets. Teacher retirement funds established emergency precious metals reserves. Public employee pension systems were hedging against scenarios where federal-state conflict affected benefit payments and retirement security. The question facing investors, businesses, and institutions wasn't whether federal-state conflicts would intensify or moderate. The question was whether American institutional frameworks would prove adequate for managing systematic breakdown of cooperative relationships, or whether alternative arrangements would become necessary for maintaining social order and economic stability. Smart money was betting that the Minneapolis shooting marked escalation rather than resolution of federal-state conflicts that would continue intensifying until institutional frameworks either adapted or collapsed. The precious metals surge reflected recognition that traditional assumptions about American governmental stability required revision in light of evidence that institutional cooperation was becoming institutional opposition. The silver market was pricing in scenarios where American federalism proved inadequate for contemporary challenges, where federal and state agencies operated as adversaries rather than partners, where citizens required portfolio protection against their own government's institutional breakdown. And increasingly, the evidence suggested that those scenarios were becoming realities rather than possibilities.